Hi everyone, thank you for joining us for our live webinar on Introduction to CFD Trading. This is Lucas, I'm Business Development Executive with Phillip Futures. Let me invite our speaker for today, Mr. Ethan, a Senior Business Development Executive for Phillip Futures. He'll be guiding us on the introduction to CFD and how to trade it on our platform MT5. Ethan, over to you.
Yes, hi, good evening everyone. Thanks for joining us in this webinar today. I'm Ethan from Phillip Futures, and today we will be going through an introduction to trading CFDs. So for today's session, I just want to manage the expectation of our viewers as we'll be going through more of the basic stuff that we will need to know before we start trading CFD. And the content is more suitable for people who are new to trading leverage products. So if you're a new trader to CFD, or if you have only been trading in the stock market, then I hope you will be able to take away something from this session. Also, all information presented does not constitute to any investment advice, so please treat this webinar solely for education purposes. Okay, so this is what we will be going through today. We'll be looking at 5 different portions. The first one will be on understanding CFD, where we'll look at what CFD is and what are some of its features, and also understanding what is this margin or leverage trading and the risk associated. So we'll be looking at why do people trade CFD as well, and also on the basic order types that we will need to understand before we can execute our trades or certain strategies. And then we'll move on to this MT5, which is also known as the MetaTrader 5 platform demonstration. And lastly, we'll end off with why you should be trading with Phillip Futures. Okay. Okay, so what is CFD? CFD is derived from the term contract for difference, and it's an agreement between two parties to settle the difference between the opening and closing price of a contract. So what this means is that CFD allows you to trade on the price movement on underlying assets such as an index or stock. So if you think that the price of the underlying asset is going up, you can buy the CFD contract and benefit from that rise. Or if you think that the price is going down or you're bearish on the particular underlying product, you can sell a CFD contract and profit from that fall. So there are various CFD which you can trade from, such as commodities like crude oil, indices such as Dow Jones, S&P, Nasdaq, or even stocks like Tesla, Apple, Tencent, DBS, or SIA. So for stock sites, we offer Singapore, Hong Kong, and most of the popular US shares. Okay. So another key benefit of CFD is also is a bi-directional kind of a product that you can trade. So this is a hourly chart of a S&P 500 index that is from mid-June to July this year. So if you look at the price movement of this chart, right, we can see that there are many opportunities which you can profit from in both this rising and falling market. So trading CFDs does not restrict you to capture only the upside potential, but you may also profit from a bearish market. So let's say if you predict that the contract price will rise, then you should be going long or buying the contract. And if the price eventually rises from the price which you entered, then you will be in the money or profiting. So the same thing is likewise, if you predict that the price will fall, then you should be going short or doing a sell on the contract. And if the price eventually falls from the price that you shorted at, then you will be in the profit. Okay. So CFD is also traded on margin, which means it is a leverage product. So below here is this picture that I think explains the concept of leverage very well. So when you're trading on margin, right, it means that essentially you're just using a very small amount of money to control a larger contract. So in this scenario, right, you're actually using $200 to control a contract size that's worth $10,000. Hence, you're actually leveraging 50 times. So it's important to note that although the leverage could amplify your profits, right, it can also increase your losses as well. Okay, so maybe we can zoom into an example of how leverage affects your P&L in an actual trade. Okay, so this chart here is showing us the hourly price movement of the S&P 500 index in August. So assuming if you buy into the contract, okay, when the index is at 3350, and then the margin required is at 10%, meaning to say the amount that you need to deposit to place to buy or sell one lot is at USD 335. So this also means that the leverage is 10 times. So let's say now if you manage to capture this movement here, the green arrow from 3350, and then you manage to exit the trade at 3004, you would have made a profit of USD $50 with just the initial USD 335 as your capital. So this translates to a profit of 15%. So what I want to emphasize here is that when you're trading leverage products, right, a small price movement such as a 1.5% movement can actually be a 15% profit in terms when we compare it to the margin you actually use to trade. So in a way, leverage is a double-edged sword. So make sure you have a trade plan and a stop loss in place when you are trading leverage products. Okay. So I think most people will also be more familiar with investing in shares compared to trading shares CFD. So there are actually more factors to take note of when you are trading shares CFD. So just an example here, if a trader is bullish on DBS shares and notices that the share prices do not usually fall below $18, so he has this trade plan to buy them at $18 and sell it when it reaches $21, profiting $3 for every share owned. So I think this example is a relatively straightforward case when you're trading shares. So essentially, you just fully pay the DBS shares at $18 per share, multiply by the number of shares you're buying, and then just sell the number of shares when it reaches your take profit target. So you're profiting X amount per share per se. Okay. So let's say if you are instead if you're trading this DBS CFD instead, there are more considerations that you will actually need to be more aware of, because right now you're not fully paying all the shares. You're just paying a small portion as a small deposit to trade a bigger amount. So things that you need to be aware of would be what is the notional value of the contract you're trading in. So you have to understand that if I buy one DBS CFD shares, one lot of DBS share CFD, what is the number of shares am I buying into? Is it 1,000 shares? Is it 500 shares? So other things that you need to take note of will also be the margin that's required to trade this product, the account balance you need to maintain to prevent liquidation, and also at what price point does the DBS shares needs to be traded at before your positions will be liquidated. So there are many risk factors and risk considerations that you need to be more aware of when you are trading CFD. Okay. Okay, so if we compare stocks tradings to trading index CFD, right, there are actually a lot of benefits uh, that you can benefit from when you trade these all these indices. So of course, the first point being that indices generally don't plunge due to one company performing badly, because what you're doing is that you're trading a basket of stocks, and this helps to cushion the poor performing companies. So usually there are many different companies in one index, and not all companies will plunge together or have this or perform well together. So there's this cushion factor when you're trading index. So you don't need to stock pick or do any company analysis when you trade the index. So let's say if you're looking at US index such as the S&P 500 or Dow Jones, so what this means is that all these indices, they provide us an indication of the US equities market, and they usually will move in tandem. So if the US index moves up, right, majority of the US stocks should also be moving up in theory. Yeah, so this is in theory, because in the real world, not all US stocks will perform according to the index as well. Majority of them would perform so that the index can work as well. So this is in theory. So when you trade all these indices, right, you generally want to be more aware of economic data such as interest rate decisions, non-farm payroll, as well as inflation rates. Okay, so these economic indicators will definitely affect the price movement of the index. So one use of CFD is also to speculate on all these indices. Okay, because CFD is also traded on margin, there is something known as a margin call. As you're only funding a small deposit to trade a bigger contract, you actually need to maintain the required margin to continue holding on to the position. So the question is, when will the broker issue you a margin call? Okay, so this happens when your equity balance does not have sufficient funds to meet the required margin. So what I mean by equity balance here is that it is actually your account balance, meaning to say whatever funds that you have funded into your trading account minus the unrealized or floating loss. Because if your unrealized P&L is in the money, meaning to say if it's an unrealized profit, then there will never be a margin call. It is only when the positions that you are holding on to have some form of floating losses, that's when you will be issued a margin call by the broker. Okay, so to quote you an example, okay, so let's say if you are trading in a contract that is worth $10,000 USD. So of course, because you are trading a CFD contract, you don't need to come up with the full $10,000, unlike trading stocks itself. So what you need to come up with is the initial margin or a margin requirement of just 1,000 USD. So with 1,000 USD, you're actually controlling this notional contract value of USD 10,000, which is a leverage of 10 times. Okay, so let's say assuming in this particular scenario where you only fund $1,000 in your trading account, and then you use your whole account balance as margin to trade this one particular contract. So a 5% drop in this contract, okay, which is USD $500, because the 5% drop is based on the notional value of 10,000. So it equates up to USD $500. So it also means that you will already lose 50% of your margin requirement. So let's say if you fund 1,000, a 5% drop in 10,000, you will have already lost 50% of what you initially funded. Okay, so to continue holding this contract, right, you need to top up to ensure that your account equity, right, is more than the margin required. So let's say if you top up 1,000, you lost 500, then you need to top up another 500 again because the margin required is 1,000. So to maintain, to keep on holding this contract, you need to ensure that your account balance has sufficient balance to meet the required margin. Okay. So in the case of Phillip futures, right? However, there's no requirement to top up within 2 days, and instead we have this risk policy that is a auto liquidation function, where it will only happen when your positions, right, will be liquidated when your equity falls below 20% of the required margin. Okay, so using the same example again, let's say if the margin required is 1,000, your positions will only be liquidated when you lost $800, meaning to say you're only left with 20% of the required of the margin required, meaning left with just 200 USD in your trading account. That is when the platform will kick in this auto liquidation function to prevent your account from potentially going into over loss. Okay. So that being said, it is advisable to not use all your account balance as margin and to always leave some access to buffer for market volatility. So all in all, you need to be more aware and manage your risk well when you are trading on margin. Okay. Okay, so moving on, maybe we can take a look at why people still find CFD appealing. Okay, so the first reason being that CFD is bi-directional, which is something that you can't do with stocks. You have to buy the physical share first before you can sell. So what this also means is that your trades are not restricted by market movement. If you have the view that the market is going down, you can actually sell it first and then buy back later. So this enables you to profit from both a rising and a falling market. Okay. Secondly, apart from speculating, which is to profit based on your market views, right? You can also hedge your stocks portfolio from a potential downside. So let's say if you're holding a lot of, let's say, local bank, DBS, UOB, OCBC, a lot of these kind of shares that pays a dividend. But during this COVID period, you know that the share price will also dip. So if you happen to sell your shares, right, you do not know where you can park your money into. So what you can actually do is that instead of selling the shares, right, you can actually short the CFD shares or short the CFD as Singapore index. Yeah. So let's say if the share price happens to drop, of course you have some losses on your physical shares, but instead you will profit from your CFD trade. So meaning to say one side you are losing and the other side you are winning. So in this case of hedging, right, you're actually not looking to profit, but instead you are just trying to mitigate your risk. So CFD is also one way for you to hedge your stocks portfolio. Okay. So another reason is also because of a leverage factor. So leverage is also one of the key reasons why people trade CFD, because it provides some form of capital efficiency, and you can actually free up your capital or other funds to make other form of investment choices. So lastly, CFD is also very simple to trade because there is no contract expiry, unlike futures trading. And if you are trading indices, it will also save you the process of stock picking and company analysis. So most of the CFD contracts are also generally quite small, meaning to say the notional value itself isn't very big as compared to trading futures. So if you are new to trading or doing CFD, then it's actually quite suitable for new traders. Okay, so moving on to the order types. Okay, so let us look into the basic order types that for you to execute your trades. And the first order type being the most straightforward one, which is a market order. Okay. Okay, so in every contract, right, you will definitely see this bid and ask quote. Okay, so bid is the price to sell, and then ask is the price to buy. So the difference between the bid and the ask is also known as the spread. So for market order, what it means is that you are actually looking to buy or sell a particular contract immediately at whatever price the market is quoting. So in this case, this is an example of a S&P index back in July. So if you want to buy one contract of a S&P CFD, then you need to buy it when the index is at 3420 points. And then if you want to sell it, you have to sell it when it's at 3419.2 points. So the spread in this case is 0.8 points. Okay. So the next order type will be a limit order, which is an order type to buy or sell at a specific price or better. Okay. So essentially what you're trying to do is that you are looking to buy lower or sell to buy lower than the existing offer or sell higher than the existing bid. Okay, so let's say in this same example, if S&P is quoting at 3420 right now, and you only want to buy in this contract at 3300, this means that you will have to enter a buy limit order at 3003. So the same thing for sell. If you are looking to sell higher than the market right now, then you need to place a sell limit order that is higher than 3419. Okay. Yeah. So if you look at this particular diagram right here, just let me put a pointer. Okay, so let's say if the price is trading over here right now at this red zone, and you think it's too high, you want to buy it somewhere over here, then you need to place a buy limit order that is below 3420. So let's say if it's 330 here, you need to put a buy order here, and once the prices reaches 3300, your order will be filled and you will have a open long position at 3300. So same thing for the sell limit. If let's say it's at 3419 now, and you only want to sell it when it's let's say at 3500, then you can put a sell limit order here. And if the prices happen to reach this particular price point, then your orders will be executed. Okay. Okay, so I think the next order type is a more confusing one, also known as a stop order. So what a stop order does is to buy or sell a contract once the price reaches a specific price known as the stop price. So when the stop price is reached, right, a stop order becomes a market order. Okay. So in a stop order, right, what you are trying to do is to actually buy higher and sell lower than whatever the market is quoting. So this may sound a bit confusing as to why someone would want to buy a contract higher than market price. if the market is quoting at 3420, why would I want to buy it at 3500, let's say? Okay. So there are two main users for stop orders. Okay, maybe we can take a look at this diagram right here first. So in the scenario of a buy stop, what it means is that, let's say the market is quoting at around this price point, but you do not want to buy it yet. You only want to buy when the price reaches a higher price point. Or let's say if the market is quoting around here and you do not want to sell it right now, but you only want to sell it somewhere lower, maybe at this price point. Okay, so there are some reasons why people use this kind of order types. So the first reason being to place a stop loss, okay, to close out your existing open positions, to reduce the amount of losses. Okay, so however, for our MT5 platform, this order type is not needed for stop loss, because in our platform, the trade ticket itself, right, you can already indicate at what price you want to close out your positions as a stop loss already. So there's no need for you to place a separate stop order for stop loss. Okay. So the other reason is to initiate a new position, meaning to say mainly for trading breakouts. Okay. So a breakout happens, right, when a stock or the index or FX price, right, it breaks through a defined support or resistance level. So if you look at this example over here, which is the dollar against the yen, right, you can see that there's a prices went downtrend and it started to consolidate between a predefined range, which is a strong support and strong resistance level. So a breakout happens, right, when the price breaks through one of these price barriers. Okay. So what happens during a breakout is that when it happens, right, or when the price trades beyond the price barrier, volatility tends to increase, and then the price will usually trend towards the breakout's direction. So in the case of a stop order, remember just now we said that if, let's say, you want to do a sell stop order, meaning to say you sell lower than what the market is quoting. So even before when the price reaches this point, if you already notice, if you already identify the support and resistance, the very strong support and resistance, and potentially, let's say you want to trade on a breakout, you can already place a sell stop order somewhere here, so that when the price breaks through, you can actually fill your order, and when it starts trending downwards, then you will be in the money. Okay, so the reverse is also true. Let's say if the price breaks through this strong resistance level, then the price can also trend up. Okay, so moving on, maybe I can do a platform demo on MT5 so you have a better idea also on our platform. So just let me do a very quick screen share for MT5. Okay, so this is the MT5 platform which Phillip offers. So over here on the left, you're able to see the watch list, meaning to say the different kind of products that we carry or offer you to trade. So over here, you can, of course, you can see many forex pairs. You can see some index like Hang Seng, and then there is gold as well. So over here are the other indexes like Dow Jones, which is US 30. We have S&P as well. We have the SIMSKI or the Singapore index. There's also the DAX or the German one. And commodities, we have oil as well, crude oil, Brent crude. And here are the share CFD. So let me just try to increase this. Okay, so over here you can see we offer shares from US, from NYSE, we have Pfizer, Nokia, things like Twitter. We also offer shares from SGX, mainly the more popular ones like your banks, Genting, Singtel, SIA, CapitaLand, things like that. And also we have shares from Hong Kong Exchange. And recently we also launched shares from Nasdaq, so you can trade the popular tech stocks like Facebook, Apple, Tesla, Netflix, Zoom, things like that. Okay. So this one is the watch list. So if you, let's say if you're looking for a particular CFD contract that you can't find, just scroll all the way down here. There is this search box over here. Just click on here and then type. So let's say if I want to trade Tesla, just type Tesla, enter. It will bring you to where it is on the watch list. You can click and drag it to the chart area, and then it will populate the chart over here. Then you can change the chart timing. Let's say you want to view a 5-minute chart, 15-minute chart, 30-minute chart, or hourly chart, up to your preference. Okay. So maybe right now, let's view the S&P 500. Okay. Okay, if you look at the daily chart for the S&P 500, it seems to be in an upwards trend. Prices are trading above the moving averages. So if you have a particular view and you want to place a trade on the platform, what you can do is you can double click here on the market watch, look for the contract, just double click on the counter. You will see this trade ticket popping up. Okay. So in this trade ticket, right, the minimum order that you need to place is 1 for this contract. If you place lesser than that, you won't be able to buy or sell. You'll be grayed out. So let's say if you place 1, meaning to say 1 lot, okay, then this one is what the market is quoting right now. So to buy right now, S&P, you need to buy at 3701.6 points. To sell it right now, it's 3700.8. Okay. So this one is also known as a market order. So you won't be able to indicate the price that you want to buy in at or sell at, okay, unless you change the ticket to a pending order. Then you can put a buy or sell limit or a stop order, which is what we shared just now. Okay. So let's say assuming we do it the simple way. Let's say I want to buy 1 lot of S&P right now. I'm bullish on it. 3701 is an okay price for me. I'm willing to buy at 3701. I want to take profit when S&P is at 3008, and I want to cut my loss if it's at 3650. Okay, so immediately I can buy. Okay, so if I buy at market, then once it's filled, right, you can see right now there it comes out as an open position here under the trade tab. Okay, so 1 lot that I buy, to know what is the notional contract value, you can right click on the counter here, go to specifications, let me see, over here. Yep. Okay, so where it tells you contract size 1, digit 1. So what this means is that 1 point here, 1 point in this S&P index is worth $1. Okay, so what happens here is that I have a position right now. I bought in at 3701. Okay, the margin required is over here, margin 162.45. Okay, and then these are my risk parameters. My take profit is here, my stop loss is over here. Okay, PP and SL. So once you have a position, right, you can also trade on the chart. So you can see two dotted, these 2 lines here. So these are my risk parameters. So this is my entry price. I entered over here, 3701. So this is my stop loss. So let's say if I'm trading on chart, and I want my stop loss to be over here. Okay, I can just pull this down, and immediately you can see that your stop loss is being adjusted to the values if you're trading on chart. Whatever this price point is at, you will adjust here. So this top line here is also the take profit. So you can also adjust accordingly to amend your take profit. So let's say if you do not want to place a stop loss, you can also click on this X button. Or if you do not want to place a take profit, you can also click on this X button. So meaning to say you just have a long position right now at 3700. So let's say if you want to close your position right now at market, the market is now at 3699.8. If you want to close, just click on this X button, and then your positions will be closed. Okay. So trading here is very easy. Indicators wise, there are many different indicators as well. Okay, so the popular ones will be like moving average. Okay, so let's say if now I want to add in a EMA, exponential moving average, at 200, purple color, I can just add in here. Okay, I think it's too far off the EMA, so we can't see it in this chart. But let's say if I insert indicator, if I add in maybe like 80, a nearer term one, maybe I put it as pink. Yeah, so you probably see a line over here. So you can just add in the indicators over here. Okay. So chart colors wise, very easy. You can also customize your chart by right clicking this, go to properties. You can change the background, you can change the scheme, black on white, white on black, things you want to do. You can amend your colors on your bar. If you want your bull candle to be a certain color, you can do it. So once it's done, you can actually save it as a template. So you can always load this template with your indicators on any chart. Okay, so to save is just right click on the chart again, just go to templates, you can save template, and then if you want to load, just right click, template, load template. Okay, so right now what I want to do is to share with you some of the trading support that Phillip has on MT5 itself. So what I mean is that MT5 alone is just a trading platform, but Phillip actually offers plugins to MT5. So maybe I can show you so you can get a better idea of what a plugin does. Okay, so the first plugin I want to share, we have three actually. It will be Autochartist. Okay, so Autochartist, what you do is you have to install this plugin that is free for all customers trading on Phillip MT5. So what you do is that once this plugin is installed, you will see under EA Expert Advisor. Just click and drag it to the chart. Then click on OK. Okay, the plugin will run. Okay, and then you will see this this window here popping up. Okay, so what is Autochartist is that Autochartist, right, what it does is that it is a market scanner. So it's constantly scanning for all the items here in the watch list for technical patterns. So over here it will show you that, okay, for UK oil D1, which is daily chart, there is a pattern here. Okay, consecutive candle that is in the downtrend. Okay, so if you move the chart to there, it shows you, it highlights for you here. There is a bearish candle pattern over here. Okay, for the daily chart for this particular product. So of course, Autochartist, this one is a demo version because I'm using a demo account. On the live version, right, you can filter all this because there's a lot, right? There's a lot of patterns that they identified. You can filter based on success rates. You can filter up to 80% success rate, and of course, the higher your success rate, the lower counters you see here. Let's say if you filter at a 60% success rate, then you will see more counters like maybe here. Okay, so maybe another example would be, let's say the EuroCat. Let's say if I view, there's a daily chart, there's an ascending triangle, so it populates up this particular pattern on the chart as well. Just let me try to. Just a moment. Yeah, okay. So in this Autochartist plugin, right, this gray area is actually a take profit zone. So it shares with you what is a potential take profit area, and it shows you a very simple volatility analysis as well. So over here, if you can see, there is a D1, there's 2 price points. So meaning to say within the trading day, right, it can range up to here or here. So this is a good way for you to have an idea on how the product is ranging. Okay, so maybe I take a look at another particular product to show you more examples. Let's say, okay, so let's say you see the Autochartist, right? It has this triangle that is broken through this wedge here already. So it's signifying that this is a Singapore index, SG100 over here. So this is a Simsky CFD. On a daily chart, there is a break on this wedge. So it's saying that within the day, it can still be volatile within this range. The volatility can be still trading within here. But the view on Autochartist is that this is a potential take profit zone trading on a daily chart. Okay, so this gives you some trading idea, at least when you are placing your trades. If you're not sure what opportunities, or if you're trading based on technical patterns, then this particular market scanner will always be scanning for you on your watch list the different kinds of technical patterns and give you some trading ideas. So on top of this Autochartist market scanner, right, it also has a risk calculator. Okay, maybe just try to let me find the risk calculator. Okay, over here. Okay, so our Autochartist plugin also has this inbuilt risk calculator. So what this risk calculator does is that straight away when you put in, it recognizes I'm trading this Singapore index. So it allows you to put in your entry price and a stop loss price, and then it will calculate for you the volume you need to place based on the amount that you're willing to lose. Okay. So example, let's say if I bought in Simsky at 322, okay, and then I'm only willing to lose $200 USD in this trade, and then my stop loss I want it to be, let's say, at 300 points is my stop loss. So based on my entry price of 322 and my stop loss at 300, right? I'm willing to lose 200 for these two between this price point, right? So the platform calculates that, okay, then you can trade 9 lots. Okay, based on these risk parameters, you can trade 9 lots. So what this does for you is that it can help you identify your position size more accurately based on your equity level also. So given a specific amount you're willing to risk and the entry and stop loss level, what is the proper trade size you should enter? Yeah, so this is what the risk calculator does. Okay, so you can use it for all other pairs also, or any other products here. It will you'll be able to calculate for you based on the volumes. Okay, so this is just the first plugin. The second plugin that I'm going to share is a Trading Central Analyst View. So same thing, once you install this plugin, you can actually drag and drop this inside the platform. Okay. So let me change it to black. Okay. So let me try. I think it's not working on this chart. So let me try to pull. Yeah. Okay. Okay, so what this analyst view does for this plugin is that it shows you immediately their preference. Okay, so Trading Central is the company. They have this preference here, which is to say that their view on this particular product, okay, is a rise. So over here, it tells you that, okay, this product is a Aussie dollar against Kiwi. Okay, so this says that there's a upside prevails as long as this price point 1.056 support is not broken. Okay, so if the price is doing here, then you should be going on long. And then they show you, just let me remove the indicators also. Okay, never mind. Let me just show you like this. Okay, so sometimes the text is a different color, so we can change the background to see better. So what it also identifies is that it shows you the pivot point, and then it shows you some key support and resistance level. So let's say if their view is a bullish market. So if you are going on long here, it shows you 3 resistance level, and the first one is the first line of resistance. And then this one is the second line of the resistance, whereby they suggest that you can actually close half of your position at this level and then close the remaining here at this level. Okay, and then it identifies for you key support as well. Okay, so if you have a view that is a short, if you think that it can be short, then this could be your first level to take profit, or your second level to your secondary level to take profit as well. Okay, so they have their analyst comment here as well. For the particular product. So this is something that can help you as well in your trading. So this is a second plugin that we offer. Okay, just let me put it back to my template. Okay, the last plugin that I want to share with you is also by Trading Central. So this plugin is called Market Bus plugin. Okay, let me share this Market Bus with you because let me share screen because it's on a new window. Okay. Okay, so once you pull out the indicator to the chart, you will see this separate window appearing. So over here, you can go to TC Market Bus. And then once it loads, right, you start to see, okay. So what is this market buzz is that it is identifying for you what's hot in the market. Okay, so over here you can see that right now BTC, which is Bitcoin, and XRP, which is Ripple, is pretty hot. So the bigger the bubble, it represents the more publications and social news. So social news are news that's posted on social media, and these are other news from news website. Okay, so the bigger the bubble, you can see that there's more news on it. So if you click into the bubble, right, then there is some it gives you an analysis and some idea on how Bitcoin is doing. So example over here, you can see the news split, meaning to say 96% is on news and 4% is on just social. And then 82% of this news is positive news that there's bullish on Bitcoin. Over here, you can see if you hover over, 8% is negative, and then there is another 10% that is neutral. Okay, so over here you can see a rough idea on all these news. What's the market opinion on Bitcoin? Then over here you can also find the news feed that is with regards to Bitcoin trading and the source that it is from. So example, you can click on it and it can tell you over here, and you can continue the story. I'm not sure you can see this window. I hope you can. So this is just a new window on the news that is by OctaFX. Okay, so you can read on Bitcoin news. And then I think they have Twitter as well. If you click on it, then it brings you to Twitter as well. Yep. So this is something that will ensure that you are not out of touch with the market. You can always identify what's hot in the market. And then of course, let's say although Bitcoin is hot, but you are not trading Bitcoin. Let's say you're into EV, you're looking at Tesla. Okay, you can actually search for Tesla. And then it gives you an analysis also over here. Tesla is actually quite hot. There is more publications recently, although nothing compared to Bitcoin, just 279. And then majority of this is by news and 10% is on social. So based on all these publications, right, 93% is positive. So they are bullish on Tesla. 5% is negative, and then 3% will be neutral. So over here, you can also see the different reports that's Tesla. So let's say there's the Apple car that's coming out soon. That is probably bad for Tesla right now. And then you can also see different news publications over here. So at least at one glance, you don't have to keep looking to Google for news. You can just use this plugin to look for what's hot. And then if it doesn't show the product you're trading, or Bitcoin is something that you're not comfortable or not interested in, even though it's hot right now, you want to trade something that you're more comfortable with, you can always search it here and then create a watch list or so. Okay. Yeah, so this one is just a platform demo and also the 3 different plugins that we Phillip Future can offer. So right now, just let me move on with the presentation. Okay, so now that we are done with the MT5 demo, right? Then let's look at why you should be trading with Phillip. Okay. I think of course there are many brokers in the market right now that you can choose to trade with. But here's just a very quick sharing on the support that Phillip can offer you. So firstly, we are using this MT5 platform, and we are actually the first broker in Singapore to offer it. And just take note that all the trades that you place on MT5 is actually 0 commission. Okay, so apart from platform, we also have our daily market commentaries, such as updates on gold, crude oil, and forex. So these commentaries are forwarded to our clients via WhatsApp, and yep, it's sent on a daily basis for you to have some idea to place trade. So Phillip Futures has also been around for more than 30 years, and we are one of the founding clearing members of SGX Derivatives Trading. So if you are residing or staying in Singapore, you should also know that we are regulated by MAS. And if you're looking for a local broker that is safe and trustable, you can consider Phillip Futures because your money will be parked here as well. So there is this ease of mind. You don't have to transfer your money out of Singapore. Okay. So our IT and dealing desks are also 24 hours for 5 days. If you happen to face any technical issues that is very unlikely in the middle of the night, right? Then we have a dedicated line for you to call as well. You can have an ease of mind that there will be support for you, even if there's any unlikely disruption. Okay, other than CFDs, we also offer other asset classes such as forex, futures, and options trading. So this will definitely be convenient for you if you are looking to trade different asset classes with just one broker. Okay, so like I shared just now, Phillip Futures, we also have 3 plugins for you that is free of charge. So the first one being Autochartist. So this is just a very quick recap. So Autochartist is a market scanner, monitoring your entire market watch list and trying to identify chart patterns, projecting them directly into your charts in real time. So instead of you constantly monitoring the market for chart patterns, this plugin will scan for you and then notify you. So on top of that, right, they have other functions such as the volatility analysis as well. So over here you can see the daily volatility, and then there is also the risk calculator, which is the one that I showed just now over here, to determine the proper trade size that you should enter based on your risk parameters. Okay. So other than other than Autochartist, we also have Trading Central. So Trading Central is able to portray these daily analyst views. So what it means is that it gives you a very straight up preference, whether it's a rise or a decline. And then it identifies key pivot levels and then support and resistance. So based on their preference, you can follow, or if you have an alternate view, then you can make use of their support and resistance levels to place your TP or SL. Okay. So on top of Trading Central analyst views, right, we also have this market bus. So what happens here is that this is actually a new plugin that we launched recently as well. So with this plugin, you're able to discover what's trending in the market based on publications or social media news. So of course, the bigger the bubble, the more online chatter there is, right? So this allows you to stay in touch with what's hot in the market and not miss out on any trading opportunity. Also, if you are familiar with a certain index or stock, then you can also create your own watch list and filter what's important for you. So actually, this one you can also filter things like if you want to zoom into certain industries, certain sectors, or countries or time frames, you can also do so. So instead of seeing like a whole bubble here that is irrelevant to you, you can zoom into certain sectors or products that you have more interest in, and then see what's hot, what's hot between the products that you're looking at. Of course, you can also see an overview of what's hot in the market if you like. Okay. So we also have this dedicated WhatsApp line if you have any trading or account related matters. So this is just a snapshot of the daily commentary which I was sharing earlier. So over here you can see that we have these publications, I'm going to say analyst views via WhatsApp, these reports. We send them to you on a daily basis. So if you have any, to give you some trading ideas. Of course, if you have any questions or let's say account related or trading related matters, right, just feel free to drop us a text on WhatsApp and then we are able to reply you or give you a call back as well. Okay. So before we move on to the Q&A, just want to share that you can easily open a trading account or apply for a demo account by scanning these QR codes. If you like some support in your trading journey, of course, please feel free to open an account with us. There are staff here to help you. So with that, we've come to the end of this webinar, and we can do a Q&A right now if there are any questions from the audience.
Yeah, Ethan, thank you for the insightful sharing on how to use the platform and the various tools that come with Phillip. Okay, one of the questions that is being asked is what is the minimum to open an MT5 account with Phillip Futures?
There is no minimum to open a trading account. So just to share, there is also no platform fees. So essentially, you can open an account for free and then look at the platform first. The minimum would be the margin required when you decide to place a trade. So if you don't have money, you won't be able to place a live trade. So the minimum I would say would be very dependent on what you want to trade. For account opening, there is no minimum amount required. Yeah.
Okay, thank you. Mr. Chen is asking, I already have a Poems account. Can I use your MT5 platform to trade?
Yes, good question, Mr. Chen. So for Poems, right, it's a separate account from Phillip Futures MT5 account. You need to open a MT5 account with Phillip Futures to trade on MT5. So the main difference, if you're familiar with Poems, would be more on a platform. As you can see, MT5 support plugins, many different plugins, and not just the 3 I showed you. There are actually a lot more plugins from the market, but Phillip sponsors these 3 right now for free to our clients. So if you compare it to Poems, of course, it's more on a platform difference. But back to the question on if you are able to use your Poems account to trade on MT5, is no, you have to open an MT5 trading account with us. Yeah.
All right, thank you, Ethan. Clients are asking, how long does it take to open an account and get it approved at Phillip Futures?
For account opening, it is quite fast. Right now, if you are using my info, which is a SingPass login for locals to open trading account, your account can actually be approved within 1 hour, and then you can fund and start trading within the same day. So it is pretty fast if you fill up the account opening forms properly. Meaning to say, without any errors for us to follow up with you. You can actually trade within hours. Yeah.
Okay, Mr. Chin is asking, for example, DBS shares, how do you know the margin required? Is there a way to see it on the MT5 platform? Would
Yes,
you be able
there.
to switch the screen?
Yep. Okay, maybe let me show you over here. Okay, so back here, let's say to find DBS, just search for DBS. Enter. So remember, you just go to right click, you go to specification. So over here, right, you're able to see the contract size is 1000, meaning to say one lot is 1000 DBS shares. So right now, okay, just let me pull the shares here. Okay, so right now DBS is trading at, let's say, about $25. So essentially one lot is 25,000. But of course, for this one, you can trade smaller than one lot. You can trade 0.5 lot. So you can trade up to half a lot, meaning to say that's the smallest contract size. But over here, if you go back to specification, one lot is 1,000 shares. So for 1,000 shares, you can go down to here. You can see the margin required. So for 1,000 shares, you can see that the margin required here is 3772 SGD. Okay, so you can see here the margin currency is in Sing dollars. The initial and maintenance margin, this is the amount. So one lot is 1,000 shares, about 3,700 Sing dollars. So if you are trading half a lot, then just divide this by 2. It's about 1,009. Okay, yeah, I hope this answers your questions. So same thing for all the products you see here. You can just right click into the contract. Let's say you just go to specification, and then you can see the margin required. Yeah.
Okay, thank you. Mr. Tan is asking, if there is no commissions on the platform, are there any charges that clients need to be aware of when trading on MT5?
Okay, good question. So for CFD, right, there is something known as this finance charge if you hold the position overnight, and also the spread. Okay, so for spread is very prominent. It's over here. The difference between your buy and sell is the spread. Or you can also see over here, if you right click here, you go to columns, you can tick on the spread here, and you will see this exclamation mark. So this is also the spread in points now. Okay, so example, let's say if I look at S&P 500, I go to right click again, I go to specification. So over here, what it means again is that right now it's 3,700 points. 1 point is worth $1. To place one lot, I need a margin of 370 US dollars. So this is a 10% margin requirement. So if you scroll down some more, right, you will see something known as a swap long and swap short. Okay, so over here, what it means is that if you are holding the contract long, what is the amount that you need to pay? And if you're holding the contract short, what is the amount you need to pay? So if it's a positive amount, right, it means that this amount will be credited to your trading account. Meaning to say, let's say if you are long on S&P today, you are actually receiving some money instead of paying. But if you are going short on the S&P, then you're actually paying instead of receiving. So in a sense of index, sometimes you are not always paying because there is dividend payout from the companies. And if the dividend payouts outweighs the finance charges, like in this case today, then there is a positive swap. So this is where you can see the swap amount. Yeah, so two ways we earn. We have a very small small markup for the finance charge, and also on the spread. Yeah, but everything else is a zero commission. And this one is only when you hold the position overnight, meaning to say you trade past today. If you are doing a lot of short-term trading, meaning to say you trade right now, you exit 2 hours later, or you trade right now and you exit 5 minutes later, then there is no finance fee involved. Okay, hope this is clear.
Okay, thanks, Ethan. One last question from Mr. Wong. Are my funds safe with Phillip Futures, and is there any default risk?
Yes, your funds will definitely be safe here. Actually, your funds is kept in a different account. So we have this customer account, trust account, that we put our customer funds into only for trading. So whatever the company's operations and all, we do not use our customer money. It's tapped from a different bank account. It's from separate funds. So this is also regulation in Singapore. If you are a regulated broker under MAS, you have to obey regulations like that. So default, no, we because your money is kept separately, there's your money is actually safe. So if in the very unlikely that, let's say touch wood, that Phillip happens to go bankrupt, that is based on that's on the company's money as well. It's not, it's separate from the customer's money. Yeah.
Right, thanks a lot, Ethan. I think that's all the time we have for today. Maybe we can just switch back to the QR code. There are some clients asking if they can see what's the QR code to open the account. Okay, thank you all so much for being a wonderful audience for tonight's webinar. A link to this recording will be made available in our follow-up email tomorrow. If you have any query on the webinar or would like to get started, simply refer to our email and we'll get in touch with you. This is Lucas signing off. Have a good evening ahead. Thank you.